Hey guys, welcome back to another valuable video. In this video, I'm going to be talking about the trades that we took today on our live trading call. Before we get started, I want you to like and subscribe, hit that like button, hit the subscribe button, and then it enhances me to do more of these videos. I have been on a social media fast. If you heard me in the last video, I haven't been posting on Instagram, TikTok, Telegram, stuff like that. Um, but that will be lifted. I'm really focused on the people that are in my group. I'm really focused on their success, getting them funded, and also getting a certain amount of funding by the end of the year for myself. So I've been focused on my trading, been focused on my students, but I wanted to continue to drop the content on YouTube because I feel like YouTube is the platform to come to learn for forex. So I will post the markups of the trades we took today in the Telegram. If you haven't joined that yet, it's free. Just go and join it so you can see the charts, so you can see me drop charts, so you can grade, that you can copy, that you can study, and stuff like that. If you have a video you want shot, if you have a question, there's a lot of people been asking me questions about the things that I talk about, terminology, and I'll get them answered, man. So just drop a comment in the comment section if you want a video shot, stuff like that. With that, let's dive deep. Okay, I'm gonna share my screen and I'm gonna share. First, we're gonna look at GU. Okay, um, that was a really, really, really awesome trade this morning. Um, and guys, this whole video is based around time and price. That's it, right? The time is the most crucial part about trading because for one, like I always talk about, is in these 3 hour windows, okay, you're leaving less room for error. Okay. So you're able to, dumb it down. You're not trading all day. You're coming to the chart in a specific time, in a specific box, and you're really dialing down on your trade setup, right? Now, there's specific timings in the market where news happens and, the market manipulates and stuff like that. When you see that, that is a footprint. That's a footprint of those guys, of the elites, of the algorithm that shows their footprint where you're able to see and you're able to carve out after that. After you see the manipulation happens, you can carve out your trade very easily. Not a lot of drawdown, and the trade goes your favor. So I'm going to show you that. As you can see here, GU on the daily time frame. I want to go to the daily time frame. You can clearly see we raped all these highs here, okay, and then we started to push down, okay, and you can clearly see we've been in a bearish market for the past week and a half. So as we're moving down, what are we chasing? We're chasing relative equal lows. We're chasing liquidity, right? So you can clearly see you can break yourself away from the daily to the 4 hour to the 1 hour and really dial in on these levels, really dial in on the lows and highs. As you can see here, we can even get lower down. So we can see that this low was significant. This low was significant. Okay. So let's go to the hour. Okay. You can clearly see that we had what? We had all of this accumulation. We dropped, we come back into this fair value gap yesterday, and we go into accumulation phase again. Okay, which was awesome. So we went into accumulation phase again through into New York, into Asian, and what did we get? We got accumulation, manipulation, distribution. Okay, so when I seen that this morning, I was like, cool. We are probably going to have a continuation in New York to go in and still retrieve, sell side liquidity. So when I seen that, I started breaking down to the lower time frame, and I seen that we left as we dropped. Okay, we pulled back and we dropped again, and we left this order block. Okay, so when we left this order block, we could just say right here on the bottom of this candle, as you can see that all these consecutive up candles is an order block, all one together on the higher time frame. Okay, so you can see that we returned there. Now I want you to pay attention to. I'm gonna turn this little indicator on that I use. Okay, I want you to pay attention to this is 8:30 Eastern. Okay, and this is midnight price. You might see that it's 11 o'clock for me. My time is still set to Central. I can read these times. I don't have to have it set. So I understand the time. Okay, so you can see that what we do on when 7:30 rolled out. We manipulate up. Okay. We manipulate up. We hit the order block. Okay. And then I want you to pay attention to this. At 8 o'clock, my time, the governor spoke for GBP. Okay. Governor Bailey. So when I seen that, I was like, okay, let's see how it manipulates at that timing on the lower time frame. So what happened right there? 8 o'clock, we smoke up. On the 1 minute time frame, you can really see it. You can really dial it in. Okay. You can clearly see they made a high. We drop down. We come back up. Okay. And then we come down. And then when the 8 o'clock news rolls out, we run up. Okay. Then we smoke that high. Doing what? We're inducing people to go long. Okay. And soon as it broke the high, what do? We wick, we take liquidity, we hit the order block one more time, and we suck back in really quickly with break of structure. Okay. With a break of structure right there. And then what did it leave? It left its footprint. It left what? Inside of the displacement. It left an order block with fair value gaps. Okay. So what I would do is, you can draw your fibs from the high to the low right there, and you can get the extreme um, fair value gap, or you could have tapped into that order block, right? At the 62%. Okay, because there's the break of structure. Here's the return to the order block or fair value gap, and there is your entry. Okay, we were able to be a part of this trade this morning, so we end up getting into the trade right there. Stop loss was there, and we end up going for a 3-to-1 on this trade. Easy money, flawless trade. We were, as we were breaking into a 1-to-1, we broke even. And it was flawless trading, guys. That is something that you want to pay attention to. When you put all the puzzle pieces together, it's really easy to understand why your trade goes very quickly in your favor, because you're putting all the rules together. You're connecting the dots, right? And you're also connecting the dots with what they're doing, and it makes more sense for the trade to go your favor. So like right here, when the trade started dropping my favor, okay, my entry was here, and we dropped. We left this little, we can see it. We left this little tiny fair value gap right here. Okay. Once we dropped and we returned to fill that, okay, we wicked into it. Guys, you can break even there. You don't like There's no reason why, when we leave a point of interest, order block for value gap, when it leaves that and returns and fills that and moves away, there's no reason for this trade to come back, right? So that's when I break even. As you can see, as we break down, every consistent up candle is being respected with the fair value gap and dropping further. As you can see, okay, that is a type of market structure you want to see. That's how you know your trade is flawlessly going your favor. It's not going to come back to a break even. You can let your break even ride, let it sit there, and let your trade be hit. Okay, that was number one trade. Number two was on the indices. Okay, we took US 30 down right here as the manipulation happened. Boom, we drop, for value gap, drop. Okay, but I want you to understand why. Okay, SMT also, a little psychology behind, why the S&P and the NASDAQ hit their lows and US 30 did. Okay. So I was like, okay, cool. We go to the 15-minute time frame. Same thing, price and time, guys. We're inside of our window. Okay. Yes, well, I have the 8:30 marked out, but I want you to understand equity too as well. So we go to the 5-minute time frame. You can clearly see right here on the 1-minute time frame. Okay. When equity rolled out, as soon as equity rolled out, we manipulate up, right? We snap the high. We getting people to chase. Okay. So when we done that, you can clearly see this low, sell side, this low was low hanging fruit. Okay. And I knew it was going to be ran out, because look at SPX. If we look at SPX, or I'll go back to US 30 real quick. So at that time, at 8:30, okay, SPX at 8:30 Where's 8:30 at? Right here. It had already ran its lows. Okay. So I was like, cool. Even if we go up, US 30 still is going to run its lows. If it didn't, it didn't. So I wanted to see US 30 run its lows. NASDAQ at 8:30. Where's 8:30? There's 8:30. At 8:30, we had done running lows. We had them pushed down. Okay. And you can see what did equity do with NASDAQ. We shot up, getting people to chase. What did we do? We chased up, equity manipulated up, rejecting off of 8:30 opening price, which is 7:30 my time, into a fair value gap, setting the pattern and dropping again. Okay. US 30 was a lot better looking to me, so that's why we took it. Plus, we had SMT divergence. Okay. So you can clearly see that we did not take out the lows yet, and we did here. Okay. And you can clearly see on NASDAQ, we didn't come back up and hit this high. We didn't. We stopped here. S&P, we didn't come back and hit no high. US 30 did. Okay. US 30 hit its high that it made at 7:30 or 7:25. So you can see here at NASDAQ at 7:25, which is right there. NASDAQ didn't take it out. US 30 did. Okay. So I like seeing that. I like seeing that. You can clearly see that we pulled into this right here is one fair value gap on the 5-minute. We pulled that in. I love to see this liquidity grab, and we suck back down really quickly, given displacement, break of structure, because this low is the catalyst of breaking structure or taking out the high, and then we broke back down, breaking structure right here. There's the fair value gap, and we were able to be a part of the trade right there. Okay, right here is where we set our stop. 2-1, easy money. Okay, 2-1. We could have gotten more out of the trade, but guys, 2 and 3-1 is usually what we usually aim for, because it's quick, it's easy. You're doubling, you're tripling your money. There ain't nowhere in the world you're gonna be able to double your and triple your money within minutes. It ain't happening. Okay, so that's the reason why, and it consistently happens. It's a consistent RR that doesn't require a high win rate. But if you have a 55 to 60% win rate, the math is ungodly. Okay. So I just wanted to show you guys this. These two trade setups are perfect. Guys, wait for this time. Wait for the time. Understand the news events. Okay. Understand the news events. Wait for these to come out. Watch how they manipulate price with these news events. It's so much easier trading when you put all these dots together. Okay. You're looking for your pattern inside of your time. Narrow that window down. Okay. I know there's a lot of stuff going on YouTube about the silver bullet. Guys, if you want to stick to that silver bullet hour, by all means, stick to the hour. It's from 9 o'clock to 10 o'clock Central, from 10 o'clock to 11 o'clock Eastern. Okay. And you can carve out trades inside of there. Okay. It can be done. It's easily done. But I just know that when you look for a trade from 7:30 Central all the way to 10, and you're able to carve out your setup inside of there, it just leaves less room for error. It's very quick. It's easy. You're off the charts. You're not trading all day. You're not subject to make mistakes in the market. Trading all day. So it's just simple trading, guys. And once you nail it down, you're able to see success really quickly. You get your life back. If you're trading all day, you need to stop that. You're not doing yourself any justice. You're shooting yourself in the foot. If you're trading 10 to 15 pairs and trying to carve out trades all day, you're shooting yourself in the foot. You need to stop, right? You need to focus on 1 to 3 pairs max and focus on that and really hone in on it. Okay. Yeah, cool. You're not going to have trades every day. That's a plus. That's not a negative, right? So I just wanted to show you these trades. Like I said, go to the news event. I caught that trade on GU based on this news event. Okay. We did have FOMC meetings at 1 o'clock today. but my trades were done and done within minutes. So um, plus that was I'm pretty sure that I could have carved out at least a 1-to-1 out of these trades before that news event came out, right? Um, and plus my trade set up, and I'm going to take my setup. Okay, so I just wanted to show you that there's a lot of you know things about this trade that has something to do with timing. Okay, I showed you a lot of timing. Hey, when I got on the indices, I didn't even show you daily bias. I just understand their footprints. Okay. And once you really focus in on what they do at specific timings with these news events, you will start to dial in on their footprints and you'll start to smack them in the teeth. Okay. So, guys, these same concepts that I'm showing you right now has netted. I just had a student pass phase 1 of the funded trader. You can see here, you can see his win rate. It's 57%, guys. He made 11%. And you know, he done this within 2.5 weeks. Okay, sticking to the rules, sticking to those windows that I'm showing you, and he was able to pass his first phase. Okay, so it can be done. I'm showing you um, that the process of it. That it's very easy to really catch these guys on what they do. Okay, and I just showed you the simple way of liquidity grab, displacement, return to a fair value gap in the displacement leg, and then go. Okay, it's simple. Wait for this stuff. Don't force it. Wait for it. When you wait for it and you actually see it performing, it's so much easier to really say, "Oh yeah, this is a plus setup." When you're forcing trades, they're not A plus setups. You're just forcing them, thinking you're seeing something and there's not, right? So um, enough rambling on. I just wanted to show you guys, that our trade setups are really based off, timing, um, and in the pattern. I call this, ICT calls it turtle soup. I call it 90% because 90% works. It works 90% of the time for me. So uh, don't get me wrong, I lose on these patterns to human error. That's the reason why that when you put all these things, these rules together, it's a really high win rate with this type of setup. Okay, this turtle soup 90% pattern, ABCD pattern. There's all kinds of names for it, right? So I just wanted to share that with you. Like I said, if you got any questions, if you want a video shot, drop in the comment section below, like and subscribe, go join the Telegram. I'm going to drop the charts of these specific setups with all kinds of annotations on it today. Um, and like I said, I'll be on the social media platforms in a few more months because I'm really, like I said, I'm really focused on my students, really focused on myself, my trading. But I'm not just going to leave you guys in the wind. Like I said, if you got any questions, got any comments, drop them in the comment section below. If you want a video shot, ask. Go in and study those charts that I'm going to drop, and I'll catch you on the next one. Peace.